Hey everybody, it's Chip Harris again. I just wanted to get back with you regarding um, the real estate market and macroeconomics as I see it today, based on what I read and based on the data that I collect on a daily basis. Just wanted to share it with you in a little summary. I've got a bold prediction today, a very bold prediction. My prediction is, and this is contrary to what most economists are saying, it's certainly contrary to what the Federal Reserve is saying, but my bold prediction is this. I think inflation is going to tamper down over the next 2 quarters because of the rate increases that have already occurred over the last couple or several months. Now, I also predict that the Federal Reserve is going to continue to raise rates aggressively. So I foresee in July another set 0.75 basis points raise in the key interest rates that kind of drive the economy from a borrowing perspective, mainly in relation to short term lending from bank to bank, and then also lending on credit cards, capital business loans for businesses to grow and expand and buy equipment or buildings. Those types of rates are going to continue to go up. Mortgage rates, on the other hand, may have peaked a bit. They may go up a little bit more, but I'm not sure mortgage rates are going to go above 6.5%. We'll wait and see. That's a bold prediction, in my opinion. I think that it's contrary to what a lot of people are saying, but my prediction is this. I think the Fed is going to overreact to the inflationary pressures we're feeling right now and that we've felt over the last 6 months. I think they were late to the game in raising rates, and now I think they're going to go too far for too long in raising rates. And what that's going to do is it's going to plunge the United States into a recession, and most likely the world, in most first world economies, into a recession. And so, that being said, that's not always a bad thing. Recessions are cyclical and they're necessary from time to time. And certainly, other than the blip we had during the pandemic when we had a very brief recession, and then, of course, came roaring back afterwards in the housing market and the overall economy and the stock market just came roaring back after the initial part of the pandemic was kind of past us, I guess you'd say. And that happened very quickly. My prediction is right now we're going to be plunged into a recession because of the Fed. And that's partially on purpose. They want to slow the economy because by slowing the economy, interest rates, by raising interest rates, slowing the economy will tamper inflation and lower inflation. It's my thought process that's already happening based on the rates that have already occurred. They last raised the key interest rate by 75 basis points in June. My prediction is, and most things I read predict that they will do so again by 75 basis points in July, and probably at least a half a point in the next meeting after July. And so I think that they're probably overreacting by doing that, but the Fed, you've got to understand, looks at old data. I mean, they're looking at data from 3 months ago, last quarter before that, and they're making decisions based on old information. For that reason, they don't know what's happening on the ground a lot of times, day to day. Of course, we do because we're normal people and we go to the grocery store and we buy gas and put it in our tanks. We don't have a driver or people carting us around in government vehicles or private vehicles. So all that being said, I think that we are going to have rates continue to go up. Mortgage rates will not go up as much as I previously anticipated. Again, I'm thinking they're going to cap out at 6.5%. I'm being optimistic. But then I think they'll start going back down. And next year in 2023 is the last part of my bold prediction. In the last part of 2023, the Fed once again is going to be late to the party, but this time in lowering interest rates. They're going to have to scramble to lower rates very quickly in the third and fourth quarters of 2023 because they're going to overreact and over raise rates, plunging us into a recession at the end of 2022 and in the beginning of 2023, and realize when they look back their 3 to 6 months that, oh man, inflation has been tampered. We've done our job. Now we've got to really get this economy kick-started again, and we've got to lower these rates to do so. We have to start doing our asset purchases again. We have to start ramping up quantitative easing again, which is what they tend to do when the economy's bad. It's a cycle. Economy's awesome, inflation goes up, they have to raise rates. They cause the economy to fall, recession, then all of a sudden they have to lower rates to get the economy jump started again. It's a weird economic cycle, but that's the one we live in, and I think that's what's going to happen. If you got any valuable content out of this video or others that I do, please like this video and subscribe to my channel. I'd love to keep talking to you. See you next time.